Well, now let's get to our first discussion now, which would be talking markets. Now, where we talk markets, we'll take you to look at market performance both in Nigeria and, of course, the global market. We've seen global issues that have shaped market structures this year, so we are going to start with it. I'm being joined by Mr. Ayodeji Ebo, who is the Managing Director, Chief Business Officer at Optimus by Afri Invest. Mr. Ebo, good afternoon and thank you for your time. It's good to have you join the program.
Yeah, good afternoon and thanks for having me.
Well, indeed, 2023 has been a year largely full of crisis, wars, natural disasters, and all, floods and volcanoes. We can talk about all of this all day. But what impact do you think all of this has had on businesses and, of course, investments?
Okay, thank you very much. And I think starting looking at it from the global perspective, it's been a very volatile year. And if you also look at the monetary policy actors, they've been very hawkish in terms of raising rates, and which we know that once rates are raised and they're high, and rates are high, it has a negative impact on the balance sheet of businesses. So it means that cost of borrowing would go up. But amidst that, we also discovered that it also created opportunities also in the market. We saw the significant rally, especially in the global space. Most developed markets recorded an average of about 15 to 18% return across the Dow Jones, S&P 500. If you check their indexes, and you would see that despite that volatility. And coming home, I would say that in terms of businesses, it's been, yes, a very challenging environment for businesses. Cost of doing business continue to go up. You earlier spoke about the inflation rates, almost touching or crossing 28%. But notwithstanding, when we look at our markets, it's been for equity investor, what we call stock investor, it's been a very positive year. We've seen more than 10 stocks gain over 600% this year. So, which means that you are able to beat inflation. Even if you streamline it to banking stocks, the banking index has gained close to about 60 to 70%. Afri Invest Banking Index has returned over 90% if you have invested in those stocks that have been selected. So, which means that while for less risk-averse investors, staying with fixed income investment, for those that were willing to take the risks, those that have invested about 6 months, 1 year ago, this year has been the year of reaping that benefit of taking that risk, and it's been largely positive across the sector. Even the oil and gas, NSE oil and gas index have gained over 100%. So it's been a very positive year. So despite the volatility, despite the challenging environment, Nigerian equity investors have been smiling to the bank.
But Europe and America, of course, have voted huge amounts to support the war in Ukraine. Now, my question really would be, would European investments recover easily from politically directed expenditure, especially as seen in countries like Germany and France?
Okay, thanks. I think it's really also going to require time. If you check the projection by the World Economic Organization, you would see that 2024 we also expect growth rates to moderate in view of some of the current challenges, or stay at current levels, which those rates are still at pre-pandemic levels. So what we are seeing is that yes, the challenges are real. This year, one of the focus of most of the central banks to see how they want to bring inflation rate down, which has largely been achieved from almost, even looking at it from the US, almost high of almost 12%, and is currently think about 6 or 5%. So that's enough. That has been achieved. So we believe they will be less aggressive. Focus will now be on growth. What can they do to support growth to a sustainable level? And so we believe that yes, it's going to take a bit of time, but the way it works in most developed economies, because they have models that actually work, they would see that they would also be able to support the economy to a level where they feel it's the growth level which they want to also achieve. Except periods when there are uncertainties that we see, but if we don't see any unexpected war amongst major countries, which like what we saw in Ukraine and Russia, triggered or distorted a lot of projections. So if we don't see that, we believe that we would see that sustained or that renewed growth across those developed economies.
Interesting stuff. Let's back to Nigeria. Yes, let's come back to base and take it from how we started 2023. Naira scarcity, though in recent times people will tell you that they are still being limited in getting their cash. A colleague was telling me yesterday that she needed to withdraw an amount, and when she got to the counter, they had to plead with her to go with 5,000 naira, not even up to half of what she really wanted. But we started the year on that note, very ugly term, preparing for general elections and all of that. But I want to ask you, how has this affected economic performance in our country?
Okay, thank you very much. To say this, when you look at data, is always the reference point. So when you look at the Q1 GDP data, you would see that a lot of the sectors, the agri sector, transportation sector, trade sector, that largely depend on cash, suffered significantly in Q1 because of the cash crunch. So it was a major setback for us, which I would call like an own goal that is self-inflicted that we could have avoided. So that caused a major setback in Q1. And we saw that rebound after the election, the reverse of some of those trends or some of those policies now helped. But most times it's not always very easy to bounce back when issues have happened. So it was really a major setback. The cost of doing business, cost of transaction increased. It means that Nigerians paid for those inefficiencies and wrong policy choice.
Now, we're still staying in Nigeria. There are indications that the CBN the banks might need to recapitalize one way or the other following the speech of the Apex Bank governor at the bankers' dinner a few weeks ago. And many is already sending messages, and everybody is running around to see how they can meet up with this if finally the CBN declares that this is when this must happen. But my question really will be, do you think that high inflation and, of course, weak Naira at the moment, will it support this recapitalization exercise?
Okay, thanks. And I think that when we look at most of the banks, who are the banks that may not have currently the strategic position with, they are those that are called like the tier 2 banks. And believe for some of them, I think recently Wema Bank is currently opened rights issue. I think Fidelity, I think some of the banks that the tier 2 banks, for most of them are working on it. And we believe that it's also to support and to better buffer their capital. So banks would try to reposition. Then what we may also see for banks that are not willing to also maybe merge and they are unable to raise the capital, we may also see a bit of maybe downgrade that we'll see in terms of licensing. It's you have the international bank, you have the national bank, the National Commercial Bank, the National Commercial Bank, and you have the regional commercial bank. So they would also require specific capital. So what we'd expect is that for those that may not be able to meet up to a certain threshold, may have to downgrade. We all recall that Wema Bank used to be a regional bank, and they were able to raise capital to begin to operate as a national bank. So there will be those kind of dynamics that we would see within the banking space, and we would also see them come to raise long-term tier 2 capital. You know, with the adoption of Basel III, even this year would also, which means that you would require significant capital for the kind of business that you're opportune to. So I think it's necessary, because you also check what the capital is worth in dollar terms. There's also a need to show up their capital to be able to participate in major deals across the world. You know, for you to be able to partner on some deals, they want to also look at your capital base. And if it's outside the country, they'll be looking at it based on what your capital is in dollar terms. So I think one thing we should first note is that, yes, no bank would go under. Depositors, customers should not fear. No one is going to lose their funds. The major thing is that we'll see some mergers, acquisitions within that space for those that are unable to raise the capital or meet the threshold once it is announced.
But what picture do you paint about companies' profits and dividends for 2023?
Okay, thank you. Very interesting question. I think that looking at it's going to vary from sector to sector, and I'll start with the most familiar sector, which is the banking sector. So we expect that, we feel that the devaluation has created significant opportunities, as well as the fluctuation we've seen within the fixed income market, especially towards the end of this year. We create significant income for the banks, which means that they will also be able to pay out dividend. Yes, let's not forget that there's also a caveat for FX realization gain that has not a realization gain. The CBN have released a circular that will not be paid out as dividend. So the focus is, when the banks try to at least realize some of those gains at this current exchange rate, for them to be able to buffer their profitability. But we also need to note that most of these profits, if you exclude some of these, I don't see them as recurring or sustainable profit or income. When you exclude them within the banking space, you would also see that the bank would have been shaky if not for the devaluation opportunities that have come this year to show up there. So what should we be looking forward to next year if we don't see such a massive difference? So for early bird positioning for investors looking at dividend, yes, for 2023 full year dividend, we believe that it will be more impressive than higher than 2020. And we also believe that the return would also be positive. Within the oil and gas space, we believe that they will also be able to match up the dividend that they're currently being paid.
Well, are you worried about quoted companies, the listing from the stock market at this time? Living Nigerian business environment, how do we arrest this ugly trend?
So I think that the major reason why we're seeing those are more strategic, based on the businesses that we're seeing, and we believe that the NSC or NGX needs to also just intensify effort to also encourage, especially domestic investors. We have SMEs or medium companies that should be looking at listing on the Nigerian Stock Exchange. So it's we say that that should have a very positive. If they look at the listings, I think that it should also help in growing the market. That is really very necessary.
All right, Deb. Now, finally, before I let you go, what is your entire outlook for the economy? It's few days to the end of the year.
Yes, so I think that we believe that we would end very high. we believe that looking at the stock market, early bird positioning ahead of dividend in the new quarter, we would continue to see that. Within the fixed income market, we expect that rates may moderate further. We've been seeing that in the last 2 weeks, may come down further. But by and large, it's been a good year for investors, and we're all looking forward to a stronger 2024.
Are you seeing that handshake between the fiscal and the monetary side moving on, Mr. Ebo? It's very important.
Yes, it's critical. Based on the conversation, yeah, we're seeing that, but we need to begin to see in terms of implementation. There needs to be a sync in terms of implementation of policies.
All right, then. I must thank you so much for your time. I've been speaking to Managing Director, Chief Business Officer, Optimus by Afri Invest, Mr. Ayodeji Ebo. Do have a great weekend and compliments of the season.